Felix here. We just got the first indication from my research assistant Tallulah here that the Fed is about to change course, not just walk over our shoulders, but we might be seeing the beginnings of a slight policy U-turn here. What do I mean by that, and why do you care? Because this is the one thing that's tanking markets. This is why we're down to below 3,600 on the SPX. This is why we're at November 2020 levels of the stock market, and they can change it and they know it. Now, will they? That's the big question after I tell you that the following isn't financial advice. Let me run you through what they just said, and I'll show you some data here as well. So I think it's important to really understand what's going on here, where conditions are. So Brainard, Fed President Brainard, came out and said she's cautious on how fast the Fed needs to raise rates, because all of the world raising rates at the same time potentially creates rates from overseas that are kind of tightening demand, and therefore demand for US products will decline. I think that's something that's quite important. Mary Daly also said, there's a cost to doing too much, although she also said there's a cost to doing too little. But where we are really here, and I think that's the important thing, is Bank of America is saying, look, we are at borderline critical levels of financial conditions. You want to tighten the market. That's what the Fed wants to achieve, but you want to do that without breaking it down. And like what the Brits did, for example, on the last week, that's causing a calamity. You don't want that. So this is the National Financial Conditions Index, comes out every Wednesday, the kind of exciting reading that me and Tallulah get up to. Winston chews it afterwards. And you can see here is a little bit of a red blip there. You might be thinking, well, is that enough? Well, it might well be. It's indicating that things are about to get tight. And if you look at COVID, which is this little bump here, we actually didn't go that high, especially on the red risk part. We didn't go that high. Red stands for risk. So that's the contributor there. Now, there is an adjusted metric for that, which is possibly more useful. So it adjusts for like the macro, what's actually going on outside this indicator. And you can also see we're peaking up here. We were already there in June, and then we kind of loosened again, and now we're tightening again. But again, if you look at where we were at COVID, we are nowhere near there yet, but it's possibly heading in that direction. So Brainard basically warning that all of this tightening that they've already done at this incredible speed, together with the rest of the world tightening, is going to take some time to really hit us. And then said, uncertainty is currently high, and there is a range of estimates around the appropriate destinations of the target range for the cycle, basically implying that there is some disagreement within the Fed lot as to just how high and how fast they want to go. So that's, I think, really important to understand. But let me zoom out and give you the true macro picture. This is the US Financial Condition Index going back to like the 70s. This here is the 70s. This here is the 80s. If you were alive in those times, you remember stuff was a lot tougher. What's that one here? That's 2008, the US housing market going kaput. So where we are right now with our tightening is actually a complete joke, right? From that point of view. So they could go harder, they could go further, but do they want to break everything in their path? I don't think so. Look at what just happened in the UK, right? An idiotic government comes out and cuts taxes, increases expenditure, and thereby has to sell more debt. The central bank is selling debt because they are quantitatively tightening, they're shredding money. And because they're doing that, UK pension funds get essentially margin called, and they have to sell their government debt also. So you've got the three biggest issuers or holders of British government debt selling at the same time, no buyers, the market tanks potentially catastrophically, so the bank has to step in. And that's what these guys are all wary of. They're all wary of creating a condition where something in the market breaks. And that's fairly easy to do when you're suddenly no longer intervening, and you've been intervening basically since 2008, right? We've been on some sort of drip of easy money and stimulus for the best part of 15 years. So as you're taking the drugs away from the patient, there might be spasms, there might be, pain, stuff might break, you might get a coronary arrest type situation, and that's what they're desperate to avoid. So I personally don't think these guys are made of really the tough stuff, and therefore I would think at some point they will ease off. The question is when. When they do, are the markets going to fly? I very much think so. Now, you might get a little bit of macro data out in the next week or two, which implies that the economy is going to get worse and the market will rally from that. And I don't think that'll last, because you need a bunch of data together and you need the Fed to react to it. That's really what you need. Now, so how do you make money in this incredibly frustrating market? Well, I do it by selling options, essentially. These are all the options trades since the beginning of July. Here are all the options trades of the year. There are lots of them. And we are up 101% so far this year. 100% in this market. And this is an interesting market, keeps us on our toes, but we can make money out of it. And that's what we go through. That's what we went through this morning in the group coaching call that I host every Saturday. We also host 3 other coaching calls from my coaching team, who are literally investment bankers. We've been trading options for 20 years. People who've been lecturers and university lecturers of options, still are, for over a decade. Quants, algo traders, that kind of stuff. Like we aim to give you the absolute best insight we possibly can, and therefore you guys make money, and that's always exciting to see, and I love seeing that. So always, look at all the posts and stuff. You can see it. I post it most days, how much money everybody's making, and that's why I do it. Because if you know something like this, if you learn something from this, because you happen to be stumbling into a trading floor of an investment bank at some point in your life, then why wouldn't you share this knowledge? When you met some people who were smart and shared it with you, I want to share it with you guys, and I want to share it so that you can make money, you can build wealth, and you can make money in a year like this. And if you make an income stream in a year like this, in addition to what you're already doing, it means you can buy more high quality stocks at discounts. So I quite enjoy a bear market, and I know not everybody does. I totally get that. I'm not wearing the red jumper for any particular reason, but it's potentially going to last quite a bit longer until we get that macro turnaround. That's really what we need to get, is for the Fed to ease off. So that means either the market itself goes really catastrophic. That would be an event. Financial conditions tighten sufficiently, or the real economy finally starts to tank, and therefore the Fed can ease off because they've achieved what they wanted to achieve, which would be lower inflation. But at the moment, market tanking, but the economy certainly isn't. So that's where we are. If you want to learn some more and figure out how we do what we do, go to felixfranz.org/coaching. If you have at least a 5-figure portfolio, we'll have a chat about how that works. And otherwise, if you're not quite there yet, that's also fantastically brilliant. Everybody starts somewhere, and we want to get you to 5 figures and 6 figures and 7 figures. Then go to felixfranz.org/options. Check out the Master Options course for the extra income stream. On everything, you get to see me trade live every week. You get access to all the strategies, all the strategy and insight. It's just, obviously, if you want to work with me one-on-one directly, then it makes a little bit more sense. But if you have a slightly higher portfolio and you're sort of there already. So we've got people who are trading typically 5- and 6-figure options portfolios inside the coaching program. So if that sounds like something that you might want to be doing, then check it out. I appreciate you watching. I appreciate you tuning in. If you enjoyed this particular video, I think you might really enjoy this one. So there it is even. Click on the next one.